Well, hello everybody. It's January 24th. This is the weekly review. We take a look at what happened last week and what we expect to happen in the coming ones. Looking back at the numbers last week, we did end up with a rise, but if you look at what happened during the week, first you had the big plunge, and then you had the big rally at the end of the week, cutting the losses on the year-to-date totals to something a little bit more respectable, but still fairly sizable losses across the board here. Today I want to step back and say, okay, what does the big picture look like? And fundamentally on the growth side, it looks to me like from everything, I'm not an economist, but from everything I read, it looks to me like you're going to see this world markets continue to just limp along. Europe actually looks like it's improving right now, whereas the U.S. data is not. Japan is muddling along, but a little bit better from the latest numbers. Equity markets, it just doesn't feel like they're going to crash here anytime soon. And what I mean is you're so stretched. If we pull up the S&P and look at it, you're so stretched to the downside. To get that break and to continue to the downside without some sort of a bounce, some sort of a lift, just seems unlikely. And I say that not just because it quote unquote seems unlikely, but if we actually look at the numbers here, and I want to pull over the monthly chart. If you actually look at the numbers, the monthly chart is going to show lighter volume, and you've had a test. And so by the end of the month, you're doing 687 now, and if you multiply it out, it's going to be lighter volume by the end of the month unless volume really picks up this week. And so it just tells me that, hey, you went down, you test the October lows, you're not able to break them out at this particular point in time, and more than likely you're going to flip it right back around. And so, I don't see any kind of crash situation for now. On the monetary policy, everything that always happens is anytime you get this huge turmoil, the central bankers come out and they start talking about QE. And you're going to see the FXY, the FXE continue their bearish trends as a result of that, probably, where these long-term trends are going to, either go sideways for a while like they're doing now, and this is the FXY, or you're going to see the continuation right to the downside, the break to the downside again. And so that tends to be what happens. You continue for a while, you test to the top side just like they did before, and eventually it breaks back down to the bottom side. That's true here on the FXY. If you look at the euro is the same picture. You big spike down, consolidation, just like they had a big spike down consolidation before. And so I don't think, you haven't tested this low yet. You haven't been able to get back up towards the highs. I don't think this thing is going to be able to lift, and eventually it is going to break to the downside. At the same time, I don't know that that's going to happen right away. And matter of fact, if you look at on a short-term basis, it's still inside this big Draghi bar, and until we actually see us get closer to March, which is where Draghi has said that they're going to probably do something, if we start to see that and we start to see more talk about they are going to do QE more, then we're going to have to consolidate it long enough to where we probably could get that. So I expect the monetary policy to drive the action. I don't think this China crash is going to take place either, although if we look at China, there's a lot more risk there. As you can see here in the monthly chart, so they had a huge run up, big spike down, right, the bounce, now the continuation back to the downside. And so my expectation is that this thing's going to come back to these levels that it was before. Now, whether it does it immediately or not is a different story. And if you take a look at these volumes here, that low was 28.44. This low here is 28.51. So you actually got under it, back over it. You're going to have lighter volume. That suggests this thing is going to hold in some sort of a range, but eventually you're probably going to get some sort of a breakdown just given the way it's set up. But it doesn't look like it's going to happen now, and so I don't think you're going to see a crash yet. If in fact we're going to see one. Crash in the sense that it goes all the way back to where it came from, or worse. Commodities. I suspect we're probably going to see some sort of an intermediate term, or if not intermediate, maybe long-term bottom, maybe this year in the oil, the gold, and the copper markets. And why do I say that? Well, you can see sort of a rounding bottom that's already taken place here, on the shorter term basis here with the gold shares. If you look at the weekly charts, right, on the weekly charts, you've actually tested under this big low with lighter volume. And so these tests that have taken place here, right, they've all come on lighter volume compared to that low, and they haven't been able to push it lower. They're doing the retest regen up here. If they cannot get this to go back down, right, this thing's finally going to get its bump back up, and then you'll see it come back up and do the next one, and that would be the second test at that level. And so this looks like it's putting in some sort of a stair-step type low, where you get the push lower, right, the bounce, the push lower that can't go and extend to the projection, the bounce back up again, right, maybe another one, and then some sort of a move to the top side. That's on the weekly. If you look at it on the monthly, you don't have anything yet, but what I'd point out on the monthly is that you're coming very close to that round number 1,000, right? And so as it comes back to that psychological level, expect it to cut under it and then hold it, and then people are going to think, okay, maybe this is it. And so on the gold, you can see it kind of happening. On the copper, it's harder to see, right, because you haven't been able to get anything going here yet. Look at it on a weekly, again, trying to extend. But, unless these extensions play out, then these markets are trying to turn. And I think you're getting cheap enough, right? These are commodities. And so what happens is the production levels just go down, When you're up here at 35 and you're down here at 22, it just doesn't pay to pull more stuff out of the ground. And so you get less and less out of the ground unless the demand keeps going down, right? If the production goes down, at some point, if that demand holds level, then these prices are going to be as low as they want to go. And I suspect, over the long term, we're probably going to see that take place here somewhere in these levels. So it's conjecture at this point, but it's my expectation that sometime this year we'll see the commodities start to find some sort of a bottom just based on the fact that they've gotten too cheap. So the backdrop this week, if we look at it, in terms of what's happening, the driver's seat since the beginning has been oil, right? It's down 22.5%, rallied back 9% 2 days into the week. I expect that's probably not going to continue. It's probably short covering, and we'll see it come back down again. That's going to put some pressure back on the equity markets. Whether it's this week or next, somewhere along the line here fairly soon, that's probably going to turn right back around. Through Wednesday of last week, this market pressed lower and lower and lower. So the first 3 days, right, it was just one day after another they could not lift, and then they went and tried to blow out the bottom. Big spike, high volume, wide price spread. That's not a good sign longer term, but you can get a nice bounce off of it, which is what they're doing. And so on the S&P 500, we got that push lower, but then it flipped around and came back. Now, if you look at those August lows, they gave way, right? But the only thing that remained was the October lows, but it held, and like I showed you already, the test was on lighter volume, or will be on the monthly. So this continued collapse, right, what did it do? It does what it always does, and it brought the central bankers out. So Draghi said in his press conference on Thursday that they're going to do some QE in March. There's rumors out of Japan on Friday, a QE there. And then everybody's starting to think, okay, the Fed's not going to do anything as a result of it. Now, we know that the risk of this is high. In other words, the ECB, that's March, it's a long way off. So once that talk wears off, the rhetoric wears off, then that doesn't do anything for the markets. Japan may not do anything. They have they're meeting this next week on Thursday, I believe, and the Fed is on Wednesday. And what if the Fed doesn't change its tune? That's, to me, that's the big risk here, is if this plays out to where the other central bankers don't line up and do something. And I say, it's important because if you look at it, last week was really critical. To hold those levels, the October lows, was like, very critical. Now, we were extremely stretched coming into them, so it's not surprising they were able to hold. I mean, if they couldn't have held the October lows with this kind of a stretch already as they came into it, then we really would have had a bad market. So to get the bounce, that's normal. Expect this thing to pull back at some point, and then that's going to be the key, is does it work lower and lower and we start taking out these lows, or do we actually get some sort of a pullback that then turns and gives us the ABCD structure right to take it higher and take us back into the swing point low? That is going to be the big story over the next week or two, and that is the critical piece. And as part of that, those monthly charts, right, the weekly charts, you've got 4 or 3 sectors in one index. They have to get back over those levels. And I'll bring up the Russell. Since we've talked about all of these, I'll just show this one, this big volume. It's not going to have the volume, right? If it gets back over it, that's going to save it, and that will bring the buyers back in and push this thing higher one more time. It finished off ABCD structures. It's starting to get the turn. If it can get the push and hold it by Friday, the end of the month, and we see that on these other sectors, in particular on the financials and the industrials, then that would be something that says, okay, this market's going to hold. But if they don't, if they can't hold it, it's a big problem, because monthly charts do not change often. They change every 4 or 5 years, 3 or 4 years. They don't change often. So when they do, it's a big deal. And so if that does happen, right, that's another nail in the bull's coffin, in my opinion. And then no matter what happens this week, right, all these charts have left volumes at the lows. I'll just pull the Russell back up, volume at the lows on the daily, on the weekly. It won't be on the monthly, and I suspect, if these hold, I suspect that's going to be the one savior that keeps these markets going for a while longer. Next week, get a full slate of earnings. You got oil's already had that huge bounce. You got Europe at first resistance. We didn't look at them, but they're bouncing right up into resistance. And you got the Fed on Wednesday, and I got a suspicion that they're not going to pull back and say, oh, we're going to respect the markets and not do anything. In other words, I still think they're going to kind of hold their line, and I don't think the market's going to like that. So what is there to keep this market from getting a retrace, a retrace off that first bounce? I expect that is going to happen, which makes this week even more critical, because they need to hold the monthly charts and not get trend transitions. So I suspect this week is going to be one more wild ride as a result of that. So what's the bottom line? The long-term trends, as I said, they don't change frequently, especially on these sectors. If they start to break, right, that's a big deal. To me, that's the biggest thing to watch, the XLI, the XLF, and the IYT as well. As I've said last week, it looks to me like we're going to claw out some sort of a bottom here short term, and these markets are probably going to hold. But there's going to be danger levels, and I also expect we're going to see some sort of a retrace this week. Best case would still be that bounce. I'm going to pull up the daily chart again here on the S&P 500. So the best case, I suspect, would be the bounce back up, right, that takes us back up towards these levels. And we're looking at this level here, about 1987. And if I take and pull over the weekly, the big thing here on the weekly is this bar. And if we draw it out, right, it's this range. And so if it can come up into this level, I think that would be best case. No matter what else happened, that would be a huge best case. What's the worst case? You go back down here and test these lows and you don't hold. That would be worst case. Highly unlikely. It's possible. What's the most likely case? Well, the likely case to me looks like it's going to be to go back and test this low. So that would give you the ABCD structure. So in other words, and I got to go back to the daily to show it. So if we come back over here on the daily, the ABCD structure would be here, right, where you come back, and that March low is right in this area somewhere. So you come back, you test into that, and then you get the bounce back up. I think that's the more likely scenario of what we'll see. And it may not be this week. We may see this market kind of hold and just kind of claw a little bit higher, and then next week you get it. But I suspect that is the thing we're going to get. I also expect that this is very unlikely this time. I know we've seen it so many times, but I think this is very unlikely this time. I think there's a lot more damage, and I think we're much farther along now where that kind of a move is just probably not going to happen. Technical details, you can read about them, but essentially you're this far away. You got to get back up above those. And then if I look at the sectors, the only ones that really did anything positive this week was XLI, which is important. XLP was a test, and we had a failure on the XLB on the weekly, so that looks like it's going to work lower, which would also dovetail into the oil market probably working lower too. If I look at the short and intermediate term trends on the indexes, the S&P, NASDAQ, NDX, they all look like they want to go up. The Russell really looks like a toss-up. The DAX, I suspect it's going to trade back and forth because it's coming up into resistance. Hong Kong, even though it got a bounce on Friday, it's still an inside bar because at a huge bar it showed down. It looks to me like it will have to test lower again, so I suspect it's down. So overall, positive on the indexes and somewhat positive on the sectors. Fundamentals, you got earnings, they're not being bought. You got the Fed and the Bank of Japan this week. That's going to be the huge data point, I suspect. And I think the Fed, whatever they do, if we're sold up, if we've been continuing higher into that, we'll probably get a reversal down. And if we work down before it, we'll probably get the reversal up. I expect it's just going to flip around whatever's happening. It just looks like it's going to be that kind of news. Not much to see on the portfolio. Did add the DGZ, added the SPY, the spec position. Need to take profits here. This is a counter trend bounce. Take profits. One of the things you're going to see in the notes that I send out is I'm going to be keeping this to 5 positions or less for a couple reasons, but I think that is a better way to handle this. So that will be coming up, and we're almost there. Actually, we are there, other than the SPY. So we'll be doing that to make things better for you and for me. All right, that's it this week. Again, I think it's going to be very volatile, and I think it's a pivotal week. You got to see those monthly trends hold. If not, you really got to respect it and look to lighten up. Till next time, take care. Thanks. See you then.